Welcome to People Who Perform, the Real Estate Careers podcast. Each episode will bring you conversations from business leaders and up-and-coming stars in the commercial real estate industry in Canada. Our guests will share their unique career journeys, passions, and advice on what it takes to be successful in this industry. This podcast is brought to you by Highview Partners, connecting people who perform in Canadian real estate.
I'm your host, Richard Costello, and today I'm pleased to introduce Marianne O'Leary. Marianne O'Leary is a highly accomplished real estate executive with a diverse career spanning 3 decades. Throughout that time, Marianne has led notable property acquisitions valued at $750 million, effectively managed annual capital budgets of up to $20 million, played key roles in due diligence, and led smooth transitions of buildings and tenants to world-class property management teams. In the world of office, multi-residential and retail properties, Marianne built a reputation for getting things done efficiently. She is known as being a tenacious and effective negotiator who wins people over with her innovative approaches to the most complex challenges. Marianne holds an MBA from the Ivy School of Business at Western University and is currently VP Operations with Smart Centres REIT in Toronto. Marianne, a big welcome to you and thank you for joining us.
Thank you, Richard.
Marianne, there isn't much you have not experienced in your career, and you have so many invaluable lessons to share. But before we get to some of those pearls of wisdom, would you be able to tell us how you got your start in the industry?
Sure. I actually came from the financial services industry, and I was in the syndication business. And in the underlying asset at the time was real estate. But we weren't actually in the real estate business. We're in the finance business. And in 1989, basically the bottom fell out of the market in Toronto and in the better part of Canada. And so we couldn't be, I was with Allied at the time. It was its early infancy. Allied had only started about a year before that. We couldn't really be in the syndication business anymore. So I had gone to the current CEO and at the time one of the partners, Michael Emery, and said, we need to bring the property management in-house because we need the revenue. And he said, well, that won't really help us. We'll have to hire people and blah, blah, blah. So I said, no. We don't. He said, why? Who's going to do it? I said, I'll do it. He says, what do you know about property management? I said, nothing. But it'll be fine. So that's how I actually got into the real estate business.
So you were one of the first people on the ground at Allied, so to speak.
Yes, the joke is that I arrived before Michael Emery. I started in May of 1988, and he started in August. The company was incorporated in April, but he was still a partner at Aaron Burles at the time.
Wow. Okay. And you spent 23 years at Allied and progressed from a PM to SVP real estate operations. So I guess when you started out, did you always have your sights set on getting to the top?
No, actually. I really always focused on growing the business. I came to Allied because it was an opportunity for us to start something new. There were 4 of us that started the company. And my first job was actually to go out and buy my desk and chair and computer. That was day one's job. And then it was really about growing the business, enhancing my learning, taking on more and more, and adding value. And basically, I was promoted because I continued to add value to an organization that was always extremely lean. So that's really what my focus was. It wasn't about particularly promotions. It wasn't setting sites. It was about growing a company and turning it into the best company it could be and making it at the time counter-cyclical so that we could weather storms, because in our early stages, we understood what it was like to be under siege because of decline in the economy.
Marianne, it sounds like you had a lot to learn in those early days as property management was completely new to you. A 2-part question then. How did you initially get up to speed with knowing what you needed to know in order to do the job? And how did you continue to invest in yourself so that when the opportunities arose, you were ready to level up?
So initially, I took advantage of a lot of our tradespeople who were what I would say extremely generous with their knowledge and their time. And they really helped me understand some of the fundamentals of building and building design. Wayne Anderson took me on the roof and took apart an HVAC unit and showed me how to put it back together. A man named Mike Martin took me in, he was an engineer, took me to the boiler room and showed me how the boiler worked, how the gauges worked. And I had a lot of different people. I had John Enright, he was a plumber by trading, showed me how the systems worked. And these were people that I still know today and I still do business with today. And they really did help me learn the business, and I helped them grow theirs. I had another gentleman who was an electrician, and at the time I didn't know much about it at all, and now I'm relatively proficient. So that was sort of the very, very early days. Then, in order to understand the property management business, I got my CPM, which is Certified Property Manager designation. I got my certified condominium designation. I got my real estate license. I joined a number of organizations in the real estate community, REIC, BOMA, TCREW, NAOP, to start networking and understanding the business better and people who are in the business better. And then eventually I got my BCom and then I got my MBA. So it's a constant process of learning. You basically have certain industry newspapers and newsletters that you have to read, and you just have to keep up with what's changing in the marketplace, and you have to be connected to the people in the marketplace.
Marianne, do you have a favorite asset class that you enjoy working with the most?
I guess I just pick mixed use, part because
Okay.
it's got everything, but
Yeah.
also it's got the most flexibility, especially now. It supports intensity, which is sort of a big buzzword now in the real estate, where you're trying to intensify your entire portfolio. It's probably the most green product because you can put more on a smaller parcel of land than any single product. And it affords interest because most mixed use that do really, really well are in the downtown core, or they're in interesting parts of the country or interesting neighborhoods. So they are the most diverse, and you really can get residential in there, you can get office in there, you can get retail in there. So you can bring to bear a lot of skill sets when you're dealing with mixed use.
Marianne, you said intensification is a buzzword in the industry right now. And I know Smart Centers is really active in intensifying their sites. Would you be able to share a little bit more about what you're up to on that side?
So at Smart Centers, we have an enormous amount of land that's available for intensification because the parcels of land that were designed for big box retail had ample parking, which, as you have autonomous vehicles, as what was very suburban now becomes more urban. We had the fortunate opportunity of the VMC, or the Vaughan Metropolitan subway stop. Literally, we're at center ice as it relates to that. So we are now not just regional shopping, so we're not just open air shopping centers. We are also office towers, residential condos. We have partnerships with Rivera for seniors. We have partnerships with SmartStop for storage. I also lead a development team. I have 23 properties that I am working on intensification strategies for directly. But every single asset we have different teams that look at intensification and how we can change the assets to respond to market needs.
Awesome. Thanks, Marianne. Going back to your time with Allied, I know you were part of the team that helped transition that business from being a private real estate company to a publicly traded real estate investment trust. I'm interested to hear what was involved in that process and what part you played in that.
As I mentioned, we were a syndicator, so we had a lot of the vehicles of the real estate that we controlled. We weren't the ultimate owner. They were through various limited partnerships with various owners. And most of those limited partnerships had sunset clauses. So the assets had to be sold and liquidated in a certain timeline. And one of the things when you own real estate is you're always trying to figure out how you deal with liquidity. So we went to the various ownership groups and put forth this idea of creating a public vehicle. We would sell the units into the marketplace, and then they would get basically paid out for their assets. So the process obviously was getting buy-in by all the various different investors in the various different limited partnerships. Then we had to value the assets at something that the REIT would be prepared to buy it in at, and the people would be prepared to sell it at. We had to conduct due diligence. The due diligence was extensive, nothing like I'd seen in the acquisition before. We had a syndicate put together for the underwriting syndicate and a lead syndicator on it, and the level of due diligence. I remember there were at least a team of 12 lawyers on this external. Some were ours, some were from the syndication. And I remember we had to go through every single thing. And one point we were checking square footage, and the square footage off was 3 square feet in the entire portfolio. And they wouldn't finish the due diligence until I had reconciled 3 square feet. It was extremely extensive. We also had to get new debt that was for the REIT. Then you literally do a public initial offering. You have to develop an aftermarket so that the stock price just doesn't immediately drop. You spend a lot of time finding relationships with analysts to cover your stock. So it's quite a process. It was very interesting to do it. Absolutely.
And what are the main benefits to the business in doing this?
Access to capital is probably the single biggest reason people go public. If you want to, most REITs, the predominant goal is to grow. And if you're going to grow, you have to acquire or develop. At the time, the growth was mostly acquiring income producing assets. So access to capital to continue to grow and buy more assets is the biggest reason. And then the liquidity for the owners is the other big reason. So because the units trade on the TSX, you can actually buy more units, create cash, whatever you need. So those are sort of the two biggest. In terms of what people don't like about going public is that everything is visible in the public markets. You make a mistake and everybody knows. You have a quarter that didn't hit what it needed to, and your stock takes a bit of a whack. So everything is under tremendous scrutiny. And the other big disadvantage is the reporting. I used to joke about saying that, it was the reporting vortex. I mean, all the resources in the company seem to just get sucked in every quarter to getting out the results. And you kind of had to find a way to keep the business going, extent the reporting that's required. But overall, it's absolutely worth doing. As you can tell, more and more companies in real estate have gone to the REIT structure. First Cap just went at the end of last year. One of the
That's right.
Yeah. So it's a structure that seems to be favored. It's the type of investors that investors like. They like the stability of it. And now more and more of the REITs are actually doing intensification and development, where usually used to be just for income producing assets.
And I guess in light of sort of the current situation, we're in sort of week 5 of isolating at home here with the COVID-19 crisis. There's been quite a lot written about the valuations with some of the real estate investment trusts in Canada, particularly that have a focus on sort of neighborhood retail. And a bit of a trend of some of the executives sort of acquiring shares in the businesses. What's your take on, I guess, on current valuations with these companies at the moment?
Well, I mean, everything has taken an enormous hit. I mean, as you know, the stock market values stock based on what they think will happen, not what has actually happened. So it's a predictor of performance, not a reflector of performance. And it the one thing the markets do not like is uncertainty, and they will um, run away from the markets, if you will, and sell in a era of uncertainty. And we couldn't be in an era where we have more uncertainty than we do now. And because of that, there are a number of people that are buying back stock. I know that Canadian Tire was doing that before this. I know we announced at some point we were considering doing this and put out a press release to that effect. So there's a lot of people that are seeing that their stocks are not valued what they know they should be. They simply are seeing what the market is reacting to a single world event that is not necessarily reflective of their particular performance or their particular stock. So, and I think it's there will be a very different circumstance when COVID-19 goes into the great good night and the economy comes back, as it were. But there will be a different world, I think, that we live in, and I think there will be winners and losers, as they always tend to be in periods of great uncertainty and great change. And we'll see, who bought the bottom of the market or who bought
Yeah.
the flying knife.
Are you ready to find the best next hire to join your real estate business? Highview is committed to finding the best talent to fit your hiring needs. Our teams specialise in recruiting at all levels, from coordinators, analysts and operators to managers, directors and vice presidents. Contact us today or visit us at highviewpartners.ca/employers.
A bit of a change of gears to turn to your leadership style, Marianne. You've been quoted as saying, "I see myself as a catalyst for planting the seed of possibility in the people around me." Can you share more about how you get the best out of people?
I've always had a good sense of what potential is in somebody. And because of that, I often push people just outside of their comfort zone. They don't always feel that there's a security blanket underneath them, but there always is. And they know that if they go to fall, that I don't let them fall. I support them. And I've often been told that people say, I learned the most when I worked from you. And I think the only time you really learn much is when you go beyond your current knowledge, and that has to be outside your comfort zone. I remember we were looking for Queen Richmond Center a number of years ago, and we were looking for a building operator. And they had identified an individual, and I often interviewed at Allied for cultural fit. Everybody else worried about whether they were qualified or appropriate, but I worried about cultural fit. And I remember there was a gentleman by the name of Powell, and he came and I interviewed him as a building operator. And when I finished the interview, I went back up to my team and I said, this individual should be an operations director, and he should come to head office, and he should teach all our building operators how to do the job. This was an individual
Wow.
from Dubai. He had built a number of high-rise properties, and he was just being, underemployed. So that was, I remember I got a text from him about 2 months ago, and he said, that's been 10 years since you hired me. And I said, do you know that I remember sitting in the boardroom in the basement And he said, "I can't believe you remember that." And I did. I mean, it's funny. I think remembering people and how they impact your life and how you can support them, and they will always be there. I bumped into him last year in Nashville at a conference, and so we're all quite connected as individuals. Despite this isolation, I think I saw a little
Yeah.
hashtag yesterday, apart but together, or something like that.
Mm.
And so I think in this business, Canada is a small place, and when we meet people, we should treat them very, very well, because we're going to see them again and again in the industry.
Yeah, very true. And what advice do you have for people that are stepping up to a management position for the first time? Because it's a difficult transition to make.
Um, I guess I would say understand the downside of anything you want to take on, and then push for the upside. Um, I think you've got to be bold. I think you've got to take risks. I think you've got to build a team and trust them. I think you can't do everything yourself. I think give credit to your team. You will always look good giving credit to your team. People above you will always know that
Mhm.
they succeeded because you were a strong leader. You don't need to do that any other way. Um, and I would also say, make sure as you tell people what you've accomplished. Sometimes we are in our own little world, and not everybody knows maybe what big accomplishment we made, because after a while we think that's just ordinary fare. So don't hesitate to remind people in an appropriate and way, the successes that the team has had, successes that the company has had that you were part of, because that's important. And I also think there's nothing wrong with admitting when things don't go right, because if we don't admit
Mm.
when they don't go right, we miss the opportunity to learn and to grow. And hopefully, people are working in a culture where failure is embraced. I think the
Mm.
expression that is fail fast and fail often. And the reason you want to fail fast is so that the economic consequences don't matter. Fail often means you keep advancing. So you want to, if you're not pushing yourself, you probably won't fail. If you push yourself far enough, every now and again, you will have a misstep, and hopefully, you'll be on a team strong enough to recover and recover quickly and support you in that.
Mm. That's great advice. Thank you, Marianne. Turning to the topic of gender equality in the commercial real estate industry now, progress is certainly being made. However, the majority of senior leaders in the industry are male. You have forged a path for others to follow, there's no question. But what are organizations missing out on by not maximizing the talents of both genders at the leadership table?
Women and men have very different perspective and approaches to challenges, to opportunities. The idea that two heads are better than one,
Mm.
four heads are better than two, that type of thing. Multiple perspectives and approaches often de-risk a project in a way that it might not, and see opportunities that you can't if you have a blind spot. It's funny, we were talking today on the team about having different people do inspections at different properties, that we all have certain blind spots. And when we get enough people at different levels reviewing the sites, then we do catch all the areas that could be improved. And I think that's the same thing with gender equality. I think you maximize opportunities and you limit your risk by having various people look at something, review it, and suss it out. And I think that's what's missing at the leadership table when you don't have gender equality. And I think in general, my experience is that women tend to have a more collaborative approach to things. Obviously, not always, and nothing is absolute.
Mm.
But I think it's a commonality that I've seen over the years, that they tend to work in that way, and they can bring multiple people in, hear various views, whether they know, regardless of where the views come from, and be able to hopefully fold that into a better outcome.
That's a great answer, Marianne. I was scribbling notes as you were talking, and I'll try and paraphrase. Diversity at the leadership table brings a more collaborative outcome and one that maximizes opportunities and limits your risks. I love that. I think that's so key. Moving on, what significant technological change has been the most impactful for your role, for the better or worse, over your career?
I remember, I'm dating myself, but I remember my first cell phone. I remember getting my first email at work. And what I can tell you is that technology has changed the speed at which we work, the expectation of response. Um, it used to be that if you said to somebody, "Can I get back to you in a week?" you didn't get a whole lot of pushback.
Mm,
Um, Now it's minutes and hours. People just really do expect you to respond with amazing level of speed, and it's quite phenomenal actually. And then the smartphones now. You're always working, whether you pay
mm.
attention to the fact or not. I remember somebody used to say, "Oh, I'm so lucky. The company gave me a phone," and I said, "Oh, so they own you every day of
Yeah.
every minute of every day." And I don't think that hit home to them very quickly. The other thing I would say is social media has made a big difference. Everything you do is judged. We had a situation on the weekend where we had towed a tractor trailer in a parking lot,
Mm,
and that individual was furious and went on social media and did quite the rant,
right.
and had a number of people start to chirp in, and we couldn't ignore it. We immediately had to deal with that fallout and our reputation and how we responded. And I spent a good part of Good Friday getting information and crafting a message to go out. Um, but on the other side is that as a company, you have an ability to get to an enormously large or targeted audience much easier than we ever did before.
You kind of lead me on to a question I have here about what strategies have you developed to manage your workflow, and what tips and tools would you recommend to others that are struggling with the never-ending stream of emails? And as you put it, sort of the expectation that, well, we're always working.
Well, I guess there's a few things, and they're no particular order, but I would
Mm,
say turn off your notifications. I've seen so many people, they pop up in the corner of the screen, they get distracted, they leave what they're doing, and the amount of time that you lose every time your brain turns to focus on a pop up in the corner of your screen is unbelievable. I would say, stop what you're doing for 5 minutes, check your emails, stretch, and start again, right? Just see if there's anything urgent. Have a couple of times in the day, whether it's the top and the bottom or the top and the middle or whatever you want, where you have a
mm,
dedicated hour or 30 minutes. Obviously, it depends on the volume of emails you have to respond to the ones that are important, to file the ones so you can deal with them appropriately, and then have a system to sort them so you know what has to be done and how they have to be done in terms of emails. But in terms of just work in general, what I tend to do is at the end of every workday, I just make a simple to-do list for the following day. But it's not an exhaustive list. It's the 3 to 5 things that must get done tomorrow, and I won't leave until they're done. They are not negotiable for me leaving until they're done. And those things for me, they can't take more than 2/3 of the day, or the list is too long because
right.
things will push into the day.
Mm,
I recheck the list in the morning to make sure those are the priorities for the day. I try and tell people understand the difference between urgent and important, and what's on your list should be both urgent and important.
mm,
And then I always say tackle the most difficult and complicated things first. some people say, oh, I got 6 things to do, so I'm going to do the easy ones and knock them off. But you really need to do the most difficult and complicated things first. First,
Mm.
because you're freshest to do them. And second, because they're going to be the most challenging to get done. And once they're done, everything in the rest of your day seems pretty simple. The
Mm.
last thing I would say, the crazier your days are, the more you need a schedule. When I learned to run for the first time, um, there was a schedule to get me from running um, 5K to doing a half marathon. Just jumped one from the other. And I remember saying to the coach, I said, how am I going to do this? And she said, look, you have a schedule. Put it on your fridge. Don't worry about race day. Don't worry about how long you're running. Do whatever is on that for that day and don't worry about the rest. And I promise you, you will run the race and you will finish it upright and smiling. So that's all I did. I followed the list religiously, and it was probably the easiest thing I ever did. I did the same.
You.
Yeah, I did the same thing. When I was doing my MBA, I was also doing my undergrad, and I had 11 courses, and I was running my consulting business. And it was getting crazy near the end when all the exams, assignments, and deadlines for clients were coming in. And I literally did a half an hour. I did a schedule for every half hour increment for a week. And I didn't do anything if it wasn't on the schedule. And if the schedule said to stop, I stopped. And it all just seemed to happen. So the crazier things are, the more I rely on a detailed schedule.
Yeah, excellent. Really helpful tips. Thank you. And I guess on the topic of your MBA, what motivated you to do that?
Well, I always wanted to get my MBA. I finished my diploma at Ryerson when it was a polytechnic. And then unfortunately, both of my parents passed away, and I couldn't go back to get my degree. And I had always wanted it. And so a number of years back in 2014, the opportunity presented itself. And I went and I did my executive MBA then.
You've got some serious drive, Marianne. It's so impressive. Would you recommend the MBA program to others in the industry? Has it been helpful so far?
So I really think that people that are in any industry now that are coming out of school, that are in their 20s and 30s, I think they're all going to need an advanced degree to really propel themselves, to differentiate themselves, to demonstrate their strength in knowledge and in stamina. To be honest, you do any
Mm.
secondary degree, whether it's an MBA, whether it's a law degree, whether it's your CA, whether it's anything like that. The secondary degree is what will set people apart and give them a chance to do even more and be acknowledged for that. I mean, if you look at CEOs of most REITs, you'll find most of them are either have a law degree or a CA, and
Mm.
some have an MBA.
Yeah, it's true. And when you look forward, what are you most excited about accomplishing over the next 2 to 3 years in your working career?
Well, 2 to 3 years to me is a very long time. Uh,
Okay.
but what actually I've signed up for is the graduate diploma in CSR at U of T. I'm always finding a way to do a bit more education, mostly because I like it.
Mm.
And I always have a lot to learn. So, corporate social responsibility is a bigger and bigger topic. Folding it into real estate and ESG is becoming more and more important. So, I always feel that I don't have enough knowledge in this. I probably know a fair bit, but
Right.
this program I'm looking forward to. It starts in the fall. It's an 18-month program. It's kind of a little bit like an executive MBA program, but focused on corporate social responsibility. So I'm looking forward to that over the next little while. Um,
For you.
Also, I constantly try and find certain team members that I can focus on helping them to advance their careers. So
Mm.
I usually pick one or two that I target for in the next year or two and see if we can make them jump their careers a little bit more than if they were not helped.
Yeah, it's awesome to give back. What advice would you have for anyone starting out in the industry at the moment who's motivated?
I would say work hard, keep up your education, um, keep up on your industry and general business knowledge. Put your hand up and ask for what you want.
Yeah, very true. And Marianne, you're so busy. When you're not working, what do you do to find your balance and to re-energize?
So I have 3 mini Dalmatians, um, and we're out and about and train them. And I'm also a big fan of plays and opera and ballet. And then I'm a bit of a news junkie, which is turning into
Yeah.
same thing again and again and again. Right now, it's not necessarily serving me as well as it usually does.
Yeah.
But a friend of mine sent me a text the other day and says the New York Times is offering subscriptions for $1 a week. so, so we're going to have more and more reading. So those are some of the things that I do.
Awesome. Well, thank you very much for your time. I won't keep you any longer here, but thank you. You've been so gracious in sharing your experience and advice. It's really appreciated. So thanks, Marianne.
Thank you, Richard. Appreciate it.
Thank you for listening to People Who Perform, the Real Estate Careers podcast brought to you by Highview Partners, a talent search and recruitment firm focused exclusively on Canadian real estate. If your real estate team is looking to find the best next hire, or if you're ready to make the best next move in your career, then reach out to Highview Partners today. Follow us on LinkedIn and visit us at highviewpartners.ca.